Hey guys, back with another Wednesday options update video. Check out the options portfolio update, all the moves that I made, and as you can see probably by the thumbnail, I had a really good week. Had some spec plays that played out. I typically am not the type of guy to do spec stocks as a rule or as a majority, but I will reserve maybe one every once in a while, right? Just to keep that excitement going, right? Because normally I'm pretty boring as far as that's concerned. I don't look at IV rank, right? I I just don't, right? It's what's been working for me since February. It has continued to work, and I just keep doing what I'm doing. So, with that being said, a couple of other news. I got portfolio margin approved and initiated in the options account, and we'll look at that on under premium cooking and see how that's affected. I'm still getting used to it. It's a change for me, and I'll try to explain that a little bit more later on. But real quick, let's go over the options that I opened since last Wednesday. So those that are new here, I share from Wednesday opening of the previous week till Tuesday close of the next week. So 5 trading days. So we'll start off with my first spec stock that I played, and that is CMPS. That's Compass Pathways. It is I think it's a psychedelic type of stock, healthcare stock, and they were having earnings. And as you guys know, I normally don't play earnings, but like I said, I reserved myself one play here for the month, and I did CMPS. I put it on November 3rd with an expiration date of November 19th. The strike price when I sold it was $45. I sold the $15 strike, and I collected 80 cents for that. So 80 bucks at a 15 strike when the stock was trading at 45. It had earnings and it fell, it crashed hard, but also the premium in it crashed hard as well. So I was able to exit that today at for 10 cents. So that was a profit of $69.32 in 6 days. So you're going to tell me, Jerry, why don't you do more of that? Well, high IV can work both ways, right? So it could have ended up being me buying 100 shares of this biotech company that I really don't want. So that's why I don't do more of it. Next up is Tupperware. Sold Tupperware. Sold a little too early. I got into it when it was 1917. It's come back up today, but I sold the 18 strike for 55 cents. Sold one contract. Ruger. Smith & Wesson has earnings on December 1st, so I decided to go with Ruger this time since they've already had earnings. And I sold the 65 strike on Ruger, collected 75 bucks on that one. Camping World, everybody knows I always play Camping World. Sold 2 contracts for 30 at the 33 strike, collected 50 bucks a piece for those. Sold 2 of them. Zillow crashed pretty hard on earnings, and so I got in and I sold a 55 strike. I really wanted that 45 strike. I think the day they crashed, the 45 strike was nicer, but I got the 55. I like it there. Collected $1 or $101 in one contract. And my spec play for the week is Newegg. Newegg is the online retailer of electronics. If you guys don't know, they've been around for quite a while. I sold the $10 strike, and I got 75 bucks for that. They're not going through earnings. They just had a spike in volatility So I looked at it. $10 is under their support level. And if it fell to $10, I wouldn't have a problem buying 100 shares of Newegg. I think, in my opinion, they'll do well on this Christmas season. And then here, I sold here. Here is Turtle Beach, which is the headphone gaming manufacturer. I sold the 25 strike there, collected $70 for that one. Then today I sold Palantir. Palantir sold off a little bit. I sold the 22 strike, and I got $60 for that one. And then Walgreens Boots Alliance, I sold the 45 strike and collected $55 for that one. So let's look at all the closings and all the profits for the week. So we'll sort this out. We'll go from November 3rd. November 3rd, bought back Winnebago for 14 cents, so profited $44.79 there in 9 days. Chegg, that was that one I did last Wednesday, or last Tuesday. I closed it the very next morning for $1.30, profited $69.51 in essentially an hour and a half, because I sold this at noon and then I bought it back at 7 in the morning. So it's about an hour and a half hold for $69.51. Closed my put spread on Amazon. That was a net profit of about $104, $105, 6 days there. Vizio fell back prior to earnings, so it allowed me to get out of this call for 15 cents, so $69 of profit there in 25 days. The Jets ETF, the airlines had a little pop there, so I was able to get out of that one for 10 cents. There were two of those, so that was $81 profit in 23 days. Got out of my TNA, the put side, the sold put side. Got out of that were $25, so $135 profit there in 21 days. Rick Hospitality, or RCI, got out of that for 20 cents, so it was about $70 in 21 days. Another Winnebago that I sold, bought that back for 35 cents, so that was $80 in 16 days. And there's a older spec stock. I had bought a call, a 6-month call on EVGO. Now, this is a story on EVGO. I was out in a parking lot one day. I think it was a Target parking lot, and I saw these car chargers. This was like when did I sell this? August 11th. And I saw these car chargers, and I looked at them, and I noticed the name of the company, and I was like, let me look into that. And this was right around the time that they were trying to push the infrastructure bill, and I said, you know what? This company here is trying to not corner it, but they're a big player in California, and California wants to go all EV cars. Yeah, I don't want to do that, but anyway, I said, they were talking about the infrastructure bill, and I said, well, let me look at the calls on this. So I ended up buying a call. It was trading at $10.50, and I bought it for $221, and I just sat on it. And they just recently passed the infrastructure bill, and this thing took off, and it went up to like 15 or something like that. No, maybe it was like 13. Yeah, because I ended up buying that, or ended up selling it for $5.10, so I made $288.64 in 89 days. I could have waited another day and collected more, but you know me, I like to take my little home runs and my little base hits and run and get away from it. Because I bought this call, it had an expiration date. It was only 6 months, so it only had a few more months left, and I didn't want to chance it. It showed over 100% profit, and I got out. So that's EVGO. United Airlines closed that one for 12 cents, $43 in 14 days. The Walgreens boots, closed that one for 20 cents, so $43 in 12 days. Intel, finally got out of Intel for 13 cents, two of those, so I profited $76 in 18 days. And there is that Compass CMPS, Compass Pathways one for $69 in 6 days. So that's all the profit and loss, and that added up to, let's check out premium cooking. So here we are in premium cooking. That amounted to $1,175.25 profit for the previous 5 days. Now that was from 13 closed positions. That was the leap, call, everything. So I only opened 8 positions though, and I only sold $588.02 in premium in those 5 days. So I really need to make up some ground here. So I have $2,832.49 in premium cooking. And you'll see I talked about turning on portfolio margin, and here we are. You'll see with $2,800 cooking, maintenance margin is only $19,200. I'm going to need to get used to maintenance margin under portfolio margin, because it takes a lot less to put some positions on, and you don't really want to get yourself in trouble. At least I don't. So currently the net lick is 116,600. Buying power usage 16.47%. So you can see what a difference, right? Because just 2 weeks ago I had 2,400 of premium cooking. My buying power usage was 21%. So makes a big difference. So, but I do need to probably sell some more premium if I want to, because I wanted to bump these weekly numbers up to about 650. That would be nice to average for me, but we'll see. This is an anomaly week. I don't expect to be making $1,000 a week, but it was a nice week. And these numbers, the profit realized is going to be a little off when I look at returns, because some of these are sold in my Fidelity brokerage account, like the leap call on EVGO. I have sitting cash in the Fidelity brokerage account, and every once in a while I like to do something with it so that it's just not sitting there. I like to at least earn a return on cash. And so sometimes these numbers will be just slightly off, but I only do like 1 or 2 a month at the most. So if we look at return on maintenance margin, 3.93%, and that's a factor of, having those calls, that one call that was out of this account, and the fact that buying power usage is down because it takes less maintenance margin for a portfolio margin account. So the return is higher, 3.93%. Return on net liquidation. Now what that means is this divided by the net lick. You know what? Did I screw this up? I did. I said I was going to do it by the previous. Oh, I think I did. Yep, that is working. M11. Yep. So that's 1% on the previous net lick. And this is 3.93% on the previous maintenance margin. Yes, so that's the right numbers. So I had a good week, can't complain. Probably won't be the same next week because I only got 2,800 cooking. I don't have any leap calls or anything that probably will go crazy and parabolic, and I really need to sell some stuff. So that's it for the week. If you have any questions, leave them down below. Like, share, subscribe, do all that good stuff. We'll talk to you later. Thanks, guys. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.